I made almost $1,000 with 3 simple trades over the past 2 days selling stock options. Here's how it worked. First, we've got Meta right here, which had a crazy little run up here the last couple of months. We had a break of this upward trend line. You can see right here, we've had this nice blue trend line. Everything along this line has been touched or almost touched and tapped. And we had a breakdown right here in July, and then we had a further breakdown now in August. So what I decided to do when I started seeing these kind of breakdowns below the moving averages of the 8 and 20 day there, I decided to go ahead and sell a covered call. I already own 100 shares of Meta. So to me, this is a safe play because I own 100 shares and I can go ahead and sell a covered call to capitalize on the profit. Now, I sold one yesterday and I bought it back inside of Interactive Brokers today for $200 American. This was a 1-day trade with almost a 50% decay in the options premium. So I actually sold it for about 400 bucks, bought it back for 200, realized about $200 US for this option trade. Now, what I want to do again here today, based on the chart, is sell another covered call. We can see here that the Meta stock price went down today. If you zoom in here, this candle is telling us that it went down, it opened up lower, it pushed lower. That's when I bought it back. And now it has been on a steady uptrend. If we flip over to the 5-minute chart, you can see that the price has kind of flip-flopped all day. The nice drop on open, it moved a little bit lower. That's when I decided to sell off right there in this general area once the market opened up. I didn't hit the bottom exactly, but I was pretty close. And then it started to move higher and bounce further upwards, giving me more kind of reason to think that it's going to kind of be a quick kind of buyers coming in and jumping in to buy this kind of dip. And then eventually it will start to slowly kind of fade back down. Why do I think this as well? A little bit of technical analysis for you is that because we have this nice candle that's going to reject the low for now, if we zoom out to the monthly chart, we can see that we have this nice, if we extend this blue line, this trend line here, it goes all the way down back to almost January of this year. And we are in the process of breaking that. We have broken that this month of August so far. We are breaking down below that. And when you have a significant breakdown like that, even on the weekly chart as well, we're going up and up and up, and we've started to see some weakness here at the top. Those trends generally don't flip on their heads right away. They kind of take a few months to play out. So my thinking is that Meta is headed for a further decline lower. That's the basis of my hypothesis. And I assume that this break may be a temporary kind of reprieve today. Again, buyers jumping in and trying to buy up this area right here. So I'm guessing that I'm going to have a little bit more of a kind of a jump and then maybe a little bit lower movement moving forward. So I think it's going to get pushed back up a little bit more and then drop further again down to the kind of the 260-ish level right around here. 260 is where I'm thinking this is going to stop out and eventually hit down here around that area right there. So if I have this opportunity to sell a call, I'm in Interactive Brokers, I'm on Meta, and for my call selling, right? I have 100 shares in my account already. I want to go ahead and sell another call around that 305 strike price. And to do this, I'm about 28 days out to expiration. I could go a little bit further out. But if I do this, I don't have the volume. And because it's the third Friday of the month, or September 1st, 8th, 15th, you have more volume in your trades and there's more liquidity, which means I should have a tighter bid-ask spread, giving me the best possible return. And it's almost right in the sweet spot for me. It was about 30 days out to sell an option. I love that. Theta works in my favor a lot quicker as well. So that 305 area, I'm always going to make sure I want to hit about a 1% return on my trade when I'm doing this. What that means is that if my strike price is 305, my bid-ask right here should be at least 3.05 or 300. So I'm going to get paid 300 bucks for selling the strike here at 305. And when I decide to do this, I could go 300, 295. I want to go 305 and give myself a bit of a buffer. I don't think Meta's price is going to get up to 305, which is way up here, right there. This will make this a yellow line. I don't think Meta's price is going to go up here and hit this line within the next 28 days. That's what I'm betting on. There's a nice late for you. That's my bet. That's my hypothesis. If it does, I'll be forced to sell 100 shares, but I still get to keep this premium that I'm about to lock in. So right here in our trade, we're going to go ahead and say 305. We're going to get paid the midpoint between 375 and 380. Red to sell. We're going to go in here, limit order, quantity of 1, because I have 1 contract, 100 shares. We're going to pick the mid price at 375. I don't want to put a stop loss or a profit taker on this. I'm going to monitor it manually on this trade just because it is a covered call. My position is covered. There's less downside risk on this position. When you're selling calls, make sure you always sell covered calls unless you understand what you're doing when you're selling uncovered calls. That is a unlimited loss potential. I'm going to click on submit and boom. You can see it's down in here right now. We're going to go ahead 368, update that. Now it's filled. Got the notification orders filled. It's in our account now. Perfect. So we have a trade in there. We've just sold a September 15, 2023 305 call for $368 US. If you convert that to Canadian like you want to do, or like I do, 368 times 1.3 roughly, 478. If we add on the 204, it's 204 plus 368, 572 times 1.3, boom, 743. So we have two trades right now for $743. We have one more trade to show you that I made on Tesla, get us that $1,000 mark in just a couple quick clicks. In my portfolio, I've got a position here of Tesla, the $200 put. Why I sold this trade? Well, we'll go to Tesla's chart here. Tesla's been on the decline as well lately because there has been some selling, and it kind of has an area where it needs to kind of catch and stop. And that area for me is that this area right here, right at the top of these lines, maybe around this area at 215 or so. I'm thinking maybe even down here at 205 and change, 208, right where these kind of candles are touching here, here, and here, and here. And if I go to the weekly chart, you kind of see those kind of areas of support as well, moving all the way back across. You can see that there's an area of defined interest right in this range where, again, we've got candles over here, 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 and here. You're going to try to find those demand zones when you're trading stocks and figure out where potential bounces can occur or areas of consolidation can occur. I think that's this area at 207. So I decided to go just below that to give myself a buffer because there has been some kind of shaky news in the kind of market right now. You have the Fed news about potential inflation leading to more rate increases, which kind of caused the market to sell off the other day. So I'm just kind of taking all this kind of stuff that's going on. The Evergrande crisis in China has kind of flared back up again. They filed for bankruptcy yesterday. So with that in mind, I wanted to go 207. I want to give myself a little bit of buffer. So my actual strike price, if I put it on the chart here, is right around that 200 area. So right down there, we'll make this one pink, nice and pretty at the bottom there. So there's still some area for it to move. It's going to have to drop about 7% within the next 30 days to get to that area. And if it does, again, I'm not out anything. I'm just potentially having to buy shares of Tesla. So that 200 area is my area of support for myself. And again, there is a significant area. It's got to move down. Still, it has moved down. I'm hoping it's going to catch right around that 207 area or close to it. I'll be protected at 200. And for this effort, again, $200 put, I was sold it. So I'm -1 in my Interactive Brokers account. And I am getting paid $404 to do that USD. You can see in the options chain right now, if I would have waited a day, I could have done the same thing and sold that 200 put over here for about $500. So I missed out about $100 the way the market has continued to move. That's okay with me. You're not always going to get the position right. But if you add up this trade, the 204, you add up the 368 right here, and you add up the 404, you get 976, and you get times 1.31, $1,200 USD, $1,000 of potential profit. Again, my only risks are for this meta position, I have to sell 100 shares of stock, which are in my account already up the top here. I have to potentially buy 100 shares of Tesla if it goes to 200. But if it stays above that, I'm good. I'm kind of thinking that the market's going to sell off a little bit more, but not to the level I'm going to get assigned these shares of Tesla. And Meta, if it gets continue to slide to that 260 kind of 5 area, 262, I'm going to make more money quicker on my covered call than I would if it just kind of stay where it was and let Theta do its thing. That's real-time options trading with minimized risk because it's covered call, because I'm a cash secured selling puts. That's how you can make decent amounts of cash with little amounts of capital selling stock options.